I hit our 100 pip target this week, but not before the market threw me some punches. And that's really what I want to talk about today. How I went from a 100 pip loss to a 100 pip gain in 5 trading days. Between Sunday night Asia trade and Tuesday morning New York trade, I lost 100 pips, almost 100 pips. There were too many trades, no flow, and a strong opinion about dollar CAD that was ultimately wrong. I bought dollar CAD on the premise that the U.S. jobs data, non-farm payrolls, was good. The Canadian data employment report was weak. Oil prices had dropped to 2-week lows, and Canada's IBPMI index hit 6-month lows. We had the zip setup that we always look for, but it turns out that it was tired, and the market just didn't want to take it higher. On Monday night, I tried to go long again and was stopped out. So we lost money on Sunday night, we lost money on Monday night in dollar CAD. There were other trades as well between Sunday and Monday, but nothing very lucrative. But on Tuesday, I got caught a very nice Euro Kiwi short trade, as you can see from this chart here. I went short euros because ultimately the overall fundamental outlook for the Eurozone was weak. ECB was the most dovish central banks. RBNZ of New Zealand was one of the most hawkish, and so that was a really nice trade. I also went long Aussie yen because market stocks kept hitting record highs, and even though Australia was in lockdown, it's the quintessential high beta currency, so it kept on moving higher, and I thought that was going to happen. On Wednesday, we had winners all around in Euro Aussie as well as Euro Kiwi. Kind of the same premise that we had on Tuesday. So that was a very good day that turned us positive and made up all of the losses that we had in the 2 days before that. On Thursday, there was a lot of back and forth, but we added a little pips, not anything meaningful, but still it was a positive day. And Friday was the day when we caught some really nice winners. I went short euro. I went long Euro CAD. I went long Euro dollar, and I also went short dollar Swiss. Ultimately, it was a bearish view on the Canadian dollar that really took things higher because Euro was the strongest currency on Friday. Oil prices were lower, and I really felt like EuroCAD was going to push higher because Canadian data was weak. And with the US dollar and the dollar Swiss trade, which turned out to be a very nice mover, we had Treasury yields kick off with a decline in the New York session. And I felt that between that and the weaker CPI data from the US, we could have a real meltdown in dollar Swiss. And it did work out. And the momentum was accelerated by the softer University of Michigan index, which, the deterioration in the UMich was no surprise because the Delta variant was causing more concerns. And I also felt that was going to weigh on the greenback. So by the end of the week, we were up 102 pips, just eking above a 100 pip target. Probably would have made more if I was a bit more patient, but having lost 94 pips, I just wanted to make sure we hit that target end of the week. So the real victory was in the turnaround. We were down 94 pips at one point, ended up 102 pips for a 196 pip positive swing. We lost money last week, we lost money on Monday, but ZIP is a time-tested strategy. Having traded it for years, I understand that there will be losing days, that there will be losing weeks, but in the long run, ZIP always comes back and wins. So for you traders out there, if you have a strategy that works, don't second guess it after 1 or 2 weeks of losses or even 1 or 2 days of losses. Markets are dynamic, and there will always be times when your strategy underperforms. But as long as it snaps back, you keep trading.